Hey guys, that is Mark Coe for the 2nd of July. Wanted to take a look at some good moves we had today in the E-minis and then some maybe not as great moves in crude. Crude was a bit tighter today, but a lot of you have been following along with this 5-minute strategy we've been running in the room, and it was really strong today again in the E-minis. Now, I want to show you the signals, not only the buy signals that were available, but also why on a bigger picture, using bigger picture levels and bias, why all these buys made really strong sense. So let's just start out first off with what the actual signals were. This is at the 9:30 open. We get buy signal here at 27.03. And again, you'll see it right here. Again, this count that initiates the buy signal. So you get 27.03 and a half. 27.03 and a half ends up trading up to a high of 19. There were a few sell opportunities within that. The next buy signal comes at 125. It comes in at 06 and a quarter. That 06 and a quarter trades up pretty nonstop till 22, and then finally to end the day, you get buy signal at 16 and a half, and the day ends just right around the 28. So again, you're talking 16 points, 16 points, so it's a total of 32, and then 12 to end it. So 44 points in the E-minis to end the day, all to the long side. 44 points on the E-minis is about $2,200. There definitively were some short-term sell signals that took part within that as well, but that's just what you had from the buy. Now, I wanted to show you, because I talk about why this makes sense on a bigger picture and why we're so focused on bottom edge longs and why the bias approach makes so much sense. And it's because of designing this range of 2700 to 2745. That once you see that, then all of a sudden it makes a lot more sense of why you're focused on long trade down into this. So think about what you have here. You have a couple month trading range that you're now visiting bottom edge, right? You're visiting bottom edge, and this is the bottom edge. I'm talking about 2,700. The market attempted it last week. It attempted it at the end of June, traded below it, could not get a close. Even traded down there in early Europe this morning. Just couldn't get a close below 2,700. So what that shows you is, although the market is attempting its weak to get down there, you are playing at bottom edge. It cannot sustain that movement. That's why all of a sudden when you take the idea of bottom edge long opportunity, it makes so much more sense because your reward is so high just to get a rotation back to most recent top edge trading, versus what your risk is that if you break it, you're out of the trade. You stop yourself out, that's the end of it. But until you do, you keep pursuing it. That's why when you go back and you look at it on that 5-minute and you say, okay, I'm getting 5-minute long trades. I talked about this in the room today, the difference of getting sell trade, right? They got some sell trade around 13. Talked about the difference of what a long trade looks like versus what a buy trade looks like at that bottom edge. And this is buy trade at bottom edge. This is buy trade at that bottom edge. So think about it on a Monday. It doesn't look like a ton of stuff's going on, but at the end of the day, to be able to capture 44 points of upside in the S&P, right? There were definitively some sell opportunities within this. But what you're seeing, the ones that actually followed through are the top side. That's a pretty big day in the E-minis. It's a pretty big day. Now, I talked about crude oil. Crude oil not nearly as impressive today because it was so kind of sideways inside of, first it was a block of 73 and a half to 74 and then traded above 74. But same kind of logic applied here in crude oil that did in the E-minis, which is the only thing you really had to look at in terms of edge was up on top. So what I was using was a sell bias, anything up to 74.40. So I had the top edge highlighted just like so. Right? This comes from Friday's pricing. So I always know where I'm looking well in advance. I didn't come up with this at 10 o'clock this morning. This was figured out the day before, so this is Friday. So now you're trading into it. Now, with that in mind and understanding this is 74.10 to 74.45, now look what short trade looks like in crude oil having designed that. And so understand when you're getting sell opportunities up in these edges, what that looks like, because all of a sudden it's a different ball game. So again, all of this stuff's available in the room and stuff we go over on a daily basis. So I hope you guys have a wonderful 4th of July. Probably will not do a video tomorrow, the 3rd of July, and then we'll pick back up toward the end of the week. So for 2nd of July, Mark Coe, cheers, guys.